5 basics of investing. Thank you so much for coming in today.
Thank
I
you.
know that it can be pretty intimidating to invest into different stocks, different markets. Why don't you go ahead and talk to me a little bit about the 5 basic steps?
Okay, one of the first basic steps is just setting investment goals, and they should be realistic, and they should have a time frame of what you're trying to accomplish and when you're trying to accomplish it. I think the second thing, and this is an overused term, but would be to diversify your portfolio. And the reason I say it's overused is I've seen people that thought they had a diversified portfolio. They had 3 funds, and those funds were all invested in the same stocks. So anyway, but diversification is important, and the timeline in terms of you're investing typically for the long term. You're not going to be, say, I'm going to invest for 1 year. It's typically a lot longer time period than that. And it's critical that you monitor your investments, and it's also critical that you understand the risk and return paradigm, okay?
And Dave, I have to ask, so when you're talking about investing in long terms, is that, say for people like me who kind of watch the market go up and go down, is that speaking to somebody like me, of me wanting to pull my money out when I saw that big dip in the market?
No, because I think if you the way to lose money is to pull your money out when you see a dip, and if that scares you when you see a dip, you probably shouldn't be in the market. But typically, the younger you are, the longer time horizon you have in order to make up. Because generally, if you look at a scale of what the market has done, it's over a long period of time, it's up. It's just that when you get closer to retirement, that you need to pull back and maybe be a little bit more conservative in your investments, and that's critical.
Well, thank you so much, Dave. And then also talk to me a little bit about monitoring those investments.
Well, the good thing about the internet is you can watch your investments every day, and the bad thing about the internet is you can watch your investments every day.
That's what I was going to say. I was going to say every single day that kind of puts me on this emotional roller coaster, I feel like.
Well, and sometimes we use a term called the sleep factor, and if you see the market go down or you see your investments drop and you can't sleep at night, you probably don't need to be in that type of investment. And everybody's risk-reward profile or propensity to risk, if you will, is different. Some people may be older and just say, hey, I'm still want to take a gamble and expose my assets to more risk, and that's okay. That's a personal choice. But as an advisor, I'm going to say the closer you get to retirement, the more conservative your investments need to be, so that we don't have a dip like we had in 2008 and like we really had a little bit this past year.
Right.
So the market, S&P dropped about 22%, the NASDAQ dropped about 30%, wow. And people were looking at their accounts. The term is, I had a 401k, now I have a 201k. Wasn't that bad, but still, yeah. That's painful when it happens. Now it's begun to rebound. In January we had a good lift up. I think it's just, you got to monitor it, but not panic just because you're looking at the news and you see the reports like, oh, the market went down so many points today, because that's just today. And many times it's just driven by something that happened overseas. It's like, hey, this happened overseas and now affected the markets today. Because that's not really long-term investing.
And the long haul. I love the way that you phrase that, Dave, of just, you got to be committed to the process, and kind of, if it stresses you out, don't be checking in on it every single day, correct?
Well, or if it's just really scary to you, if you just, I'm just a real conservative person, then you just need to tell your advisor to just put me into something more conservative. So I don't have to stress out over it.
Awesome. Well, thank you so much, Dave, for being here today. We really appreciate you coming in.
Thank you.
And for getting us squared away with all of this.
Good deal.